Okay, let's dive right in. Imagine a high-stakes financial mystery where the only proof of a multi-billion-dollar bailout was caught completely by accident. Follow the trail of this global secret, and it leads straight to the absolute highest levels of the U.S. government. Turns out, the U.S. quietly stepped in to throw a massive financial lifeline to its biggest foreign creditor, Japan. Why? Because the Japanese yen was collapsing to 40-year lows. That kind of drop causes immense economic pain. Officially, the U.S. cited friendship, but the actual mechanism they used was completely hidden. In fact, the only proof of this unprecedented intervention was a simple, handwritten to-do list. Just sitting right there on a desk, super casual, masking a powerful financial directive. And boom, there's the smoking gun right in front of the U.S. Treasury Secretary. Buy Japanese yen, $5 to $10 billion. Captured by a long lens camera at exactly 11:33 a.m. on Friday, July 31st, right before markets were about to experience a serious shock. This accidental photo became the literal receipt for a multi-billion-dollar geopolitical maneuver. And sure enough, the news broke. The U.S. had bought yen based on that doodled note. The sheer magnitude of this is absolutely stunning. It broke decades of established financial convention. It was the very first time the U.S. intervened to buy yen since 1998. So the central question for today's explainer is this. How did the U.S. actually pay for this, and why did they really do it? Okay, let's slow down for a second and unpack exactly what happened here. The mechanism used for this bailout is something called the Exchange Stabilization Fund, or ESF for short. You can kind of think of this as the Treasury Secretary's personal piggy bank. It's a massive pot of money that can be spent without any congressional approval, purely to stabilize the U.S. dollar. But guys, here is the truly wild part. The U.S. didn't actually buy Japanese yen with dollars. No, they tapped into the ESF, dumped billions in euro assets to buy yen, and literally only told the European Central Bank after the ink was dry. America broke a 28-year rule and kept the whole shebang a total secret. Now, to understand why they went to such extreme lengths, we have to look at what's called the doom loop. Right now, Japan's benchmark interest rate sits at around 1%, while America's is much, much higher. And capital doesn't catch feelings, right? It simply goes wherever it gets paid the most. So global investors basically dumped the yen to chase higher U.S. yields, which drove the yen right off a cliff. And here's the catch. Japan can't just raise their rates to fix it. Why? Because the Bank of Japan owns half of its own government bond market. If they raise rates, they suddenly owe trillions in interest. They are completely trapped. So to defend the yen, Japan had to buy it by selling dollars. But Japan's dollars are mostly tied up in U.S. Treasury bonds. To put this into perspective, in just one single month, Japan dumped a staggering $66.7 billion of U.S. Treasuries. And when you flood the market with American bonds like that, the price drops and U.S. borrowing costs just shoot straight up. Actually, Japan selling off all that debt drove America's long-term borrowing costs to their absolute highest level since 2007. Basically, every single dollar Tokyo spent defending itself was actively hurting the U.S. economy. Which brings us to a highly suspicious timeline. Let's look at the exact sequence of events here. On July 23rd, the U.S. Treasury actually placed Japan on its official currency watch list for potential manipulation. Yet just 8 days later, on July 31st, the U.S. secretly goes into the market to buy Japanese yen to bail them out. And then exactly 48 hours after that secret intervention, the U.S. Treasury Secretary publicly requests the expansion of a very specific financial tool called the FEMA repo facility. I mean, think about it. Why bail out a country you just flagged for currency risk and then immediately ask to expand a financial tool that nobody was even using at the time? The timing alone tells us something massive was going on behind the scenes. And that leads us to the ultimate cover-up tool, the FEMA repo facility. So what exactly is this thing? Well, you can think of it like a secret backdoor pawn shop for foreign central banks, run directly by the Federal Reserve. It was built specifically to stop countries, like Japan, from dumping their American debt on the open market whenever they get desperate for cash. Let's break down exactly how this pawn shop works. Step 1. A foreign central bank, like the Bank of Japan, hands over their U.S. bonds to the Federal Reserve. Step 2. The Fed provides them with cold, hard cash. We're talking dollars they can instantly use to buy yen and defend their currency. Then, step 3. The very next day, Japan repurchases those bonds back for a tiny fee, say just a $1 difference, which acts as the interest the Fed earns. This mechanism is honestly genius. It gives Japan the cash it desperately needs to defend the yen without ever actually becoming a seller on the open market, meaning they don't tank the US bond market in the process. It's basically a hidden liquidity backdoor, perfectly designed for a creditor you simply cannot afford to lose. And this brings us to the real motive behind all of this. As Mark Sobel, who is a 40-year veteran of U.S. Treasury monetary policy, pointed out, aside from supporting a friend, the Treasury may have been concerned that a weak yen could push American long-term rates higher. And there it is. The U.S. didn't bail out Japan purely out of friendship or historical ties. They did it out of strict self-preservation to stop a catastrophic sell-off of the American bond market. So what's the big takeaway from all of this? Simply put, the story that gets officially reported and the story actually unfolding underneath are rarely the same. I mean, everything we just looked at in this explainer today, the data releases, the policy moves, it was all completely public if you knew exactly where to look. But the only thing that gave away their true unfiltered intent was a careless little doodle caught by a camera lens from across a room. It really makes you wonder, if a multi-billion-dollar international bailout was just sitting casually on a desk, what other global financial secrets are currently operating in the shadows just waiting to be uncovered? What else is hiding on a notepad right now?